Hello and welcome to the CNBC-TV18 Mumbai newsroom. I'm Ekta Batra and you're watching your stocks on CNBC-TV18. Well, those are the PNB numbers on your screen, where the gross NPA in fact is down around 3.5% on a Q-on-Q basis. So it's not looking too bad in terms of the asset quality. The net NPA too has reduced by 7.5% on a sequential basis, and the net profit probably seems to be a bit of the worry, and that's maybe the reason why you're seeing the stock react as sharply as you are. It's probably a case of higher provisions, higher operating expenses, which has really impacted the bottom line this quarter, because all of the other parameters seem to be quite steady for PNB. So NII is higher on a Q-on-Q, on a year-on-year basis, and we have the NII, in fact, at around 8,271 crores. We were expecting around 7,940 odd crores. Gross NPA, as you can see on your screen, has improved on a Q-on-Q basis at around 10.5% versus 11.3% Q-on-Q. Well, those are the PNB numbers. As you can see, there is some amount of improvement from the day's low, but the stock's still down around 4% odd. Maybe we'll get the provisions as well as the operating expenses on a year-on-year basis for you, and that'll give you a better picture in terms of why exactly the profitability has been impacted as compared to our poll. But on your stocks this afternoon, joining us today, we have Sharad Avasthi of SMIF and Kush Bohra, founder of kushbohra.com. Welcome, gentlemen, to the show. Sharad, just wanted your quick thoughts on PNB, and the numbers have just come out. What would you recommend?
Yeah, I think in terms of valuation, the space, the whole PSU bank space is attractive, and we remain constructive on the space. Though we are looking at going ahead with the frontline banks only, because net NPAs are still high at around 3.84%, though they are improving on a sequential basis. So I think advances growth would kindly would play a big role. But valuation-wise, they are all very attractively priced. But we are more comfortable with a Bank of Baroda or an SBI.
Okay, so you'd be more comfortable with an SBI or a Bank of Baroda. In fact, State Bank of India comes out with its numbers this Saturday. But Kush, same question to you. There's a lot of fervor which is coming into individual banks. Many of them are sitting at fresh 52-week highs today. Case in point would be something like a Bank of Baroda as well. And there has been more momentum in terms of positive numbers for a couple of the banks in the past couple of days. What is your view in the PSU space? Which is the stock that you like?
Sure. So Sharad's already mentioned SBI and Bank of Baroda. I'll add the third candidate to the list, which is Canara Bank. Now, we've seen a lot of movement in relatively smaller stocks. Right now, technically, they seem very heated. Plus, the visibility from here on, or at least the payoff ratio from here on, could be very unfavorable. As far as Canara Bank goes, the stock's doing fairly well. We're seeing a lot of delivery action even after this kind of jump. So I would suggest Canara Bank could be added to the list, along with Bank of Baroda and SBI. But just while we are on the subject of banking, a quick word: HDFC Bank seems to be getting out of its slump from the private bank space, and this could probably be one of the highest contributors if the Bank Nifty were to make new highs and go higher from there.
Okay, all right. So that's on PNB. The other stock reaction which really stands out at this point in time is Sun Pharma. That stock is up around 2.5 to 3% reacting to what has been an extremely strong performance, at least on the operating margins this time. So as you can see, Sun Pharma at around 1,050 at this point. Kush, any view there?
Oh, absolutely. These two stocks, Sun Pharma and Cipla, have been the ones they've been actually leading the whole pharma pack. There was a time when they did seem a little stretched. Even now, they seem a little stretched, but there is still some room for upside. 1100 is a level that I wouldn't rule out on Sun Pharma on an immediate basis. Although after such a move, you would want to wait a little, buy it closer to 1000 levels. That would make your payoff profile, that much more favorable. But all in all, the trend looks nice. If someone's got an existing position, they should for sure hold on, to this stock with the stop loss of 975.
Okay, all right. Let's get to some queries now. In fact, our first query is Zubin Sheikh. He writes to us from Kerala. He holds 100 shares of ITC, which he bought at around 270. 350 shares of Bharti Airtel, which he bought at around 515, and 500 shares of NTPC, which he's bought at around 125. Long-term investor and wants to know the future prospect of all of his investments. So it's a bunch of large cap stocks, frontline stocks that he has. Sharad, what would you recommend to Zubin on his portfolio? He's a long-term investor.
I think ITC can continue to hold. The demerger will add another avenue. Maybe some re-rating will happen further because cigarettes, hotels, the FMCG business itself is doing very well. And we do not see any near-term headwinds. Even the paper business is doing very well. So all these combined, we think the earnings could easily grow around 10-12% CAGR over the next 2-3 years. So considering a 25 kind of multiple on FY25 earnings of 17.5, he could continue to hold on to ITC with a target of around 440. Bharti, we are very bullish on the space. I think 5G is a long-term trigger that will gradually play out, but the ARPU improvements that we have been seeing, it has already improved to somewhere around 197. Gradually, there is a scope that this goes up to 300. In terms of ARPUs, we are one of the lowest ARPUs countrywide throughout many emerging and developed nations. So I think that has a lot of scope here. Broadband penetration is another area of scope. So earnings growth would be very strong. So Bharti, I think you should hold on for a target of around 900, 950. The third stock you said was?
NTPC?
NTPC, okay. NTPC after the recent run-up seems like somewhere near to fairly valued, around 180, 185. So I think NTPC, he could book some profits, not total, but valuations still continue to be attractive compared to other players. And the type of shift they are doing into renewables and other renewable space, I think that is something that can add value to it. A demerger out of that or a separate listing out of that instrument, that space could further add value to NTPC. So NTPC, you could book some profits, very marginal, say 20-25% of his holding. And rest of it, he can continue to hold. I think long-term, the dynamics are very positive for NTPC as well.
Okay, all right. So largely bullish on that entire portfolio of stocks from Sharad. But let's get to another query then. Mohit Mehra writes to us from New Delhi. He holds 35 shares of Tata Steel at 100 rupees. That's what he bought it at last year. And 25 shares of FMCG major ITC. We just discussed ITC at this point. He is making a minor profit in his investments. He wants to know the future prospects of his investments and whether he should hold on or not. Let's get an answer from both our guests on this. Kush, let's start with you.
Sure. Tata Steel would be an exit right now. The stocks tried a couple of times to make a dash higher, but it's found resistance at every level, be it 100, 105, 108, and right now it's currently trading below its all of its averages rather. So I would suggest an exit from Tata Steel in particular. The entire metal pack actually has been in a bit of a pressure. The loss right now is not too much, so it wouldn't hurt or pain too much getting out from Tata Steel right now. As far as ITC goes, my view is fairly similar to what I heard Sharad say just a while back. This is a stock which is now moving sideways after a very strong run up over the last 6-8 months, but nothing structurally changes in this stock. This is more of a consolidation phase. I would say this is a place where you could add more. The targets for ITC from a trading perspective would be around 390 to 400 levels. If you have an existing position like the gentleman does, keep it keep a trailing stop loss of 330. That's where you'd want to exit if the stock drops, but otherwise nothing changes structurally for the stock. Still remains in a bullish uptrend.
Okay, bullish uptrend for ITC. Well, you already Sharad gave us your perspective on ITC, but on Tata Steel?
Totally contrarian view. I think he should continue to hold on. Most of the problems seem to be behind us. Even the raw material pressure is easing. Though the finished product prices have also come down, so that's a bit of a problem. But what we are considering is that this is just coming down to the highs prior to COVID actually. So prior to COVID, the range that HRC was largely trading into, we believe prices are coming down to those levels. For Tata Steel, the debt reduction is a very positive thing that has happened over the last 2.5 years. And that should play very well. The domestic operations are 60-65% of the EBITDA, 30-35% comes from the European operations. That is one area we think that could be subdued for the next 2-3 months. But there also in Europe also gas prices have been coming down, though availability remains a problem. So I think post winter that should normalize, and Indian demand should also pick up. On the domestic side, they are doing a decent capex on the domestic side, roughly increasing the capacity by around 10-15 million tons. So that should be very positive for Tata Steel. So whatever valuation, whatever top line losses we incur because of lower realizations, I think most of it would be made up by quantity or improvement in revenues, total sales basically. So I think for FY24, we expect the earnings to be somewhere around 14 to 15. This quarter has been a bit abnormal because of inventory losses and all that. But gradually this should stabilize around that range. And I think it should trade at around something around 9 times. So for FY25, I think 24, 135 kind of target, it should continue to hold on Tata Steel.
Okay, all right. So positive on Tata Steel there. But let's get to another query now. Shweta Jain writes to us from Chandigarh. She holds 25 shares which she's bought of Titan at around 1,000 odd rupees, and she's a long-term investor. She wants to know whether to stay invested or to book her profits and exit at current levels. Well, I must say we're getting a lot of queries of people who are long-term investors and a lot of frontline stocks that they're holding on to as well. Where is Titan in your pecking list, Sharad? You know, it's a good amount of profit being made here. What would you recommend from here on?
Basically, the company is very aggressive in terms of the long-term growth plans that they have put in. Even now, they are talking of 2.53 times kind of growth on the main jewelry business, which is 80-90% of the revenues. The other aspects, watch and wearables, also they have been very aggressive. And largely, they are catering to the mid-income, higher upper mid-income range. Most of the products or placement that they have is in that range. And I believe that that range is going to grow at a very handsome rate over the next 2 to 3, actually 5 to 10 years, because of urbanization and the women workforce joining into the main force. So I think that is something that is going to affect Titan's growth. But valuations are already at 63 times FY24 expected earnings. So if you have a 1 to 2 year kind of horizon and you are that kind of investor who is looking at 1 to 2 year kind of horizon to make money, I think there could be some disappointment out of Titan. But if you have a larger horizon where you can stay in for, say, 4 to 5 years, 6 years, then maybe it could be very good. The competition is intensifying in the space, so it will not be as easy for them as it has been in the past. So that's a challenge. So that is why if you have a high risk appetite and you are willing to hold it for around 4 to 5 years, it makes sense. 1 or 2 years, I think there is high probability that you would see more of a time correction.
Okay, more of a time correction. So that's the word coming in on Titan. But the other query now we have is Manoj Biswas, who writes to us from Bihar. He holds 50 shares of Grasim, which he's bought at around 1,200 rupees plus, and 75 shares of HCL Tech, which he's bought at around 890. He's making profits in his investments and he wants to know whether to remain invested or to exit at current levels. Well, a lot of investors, like I mentioned, of frontline stocks and long-term views here. But Kush, what would your recommendation be both on Grasim as well as on HCL Tech?
So just to add to the list of, a lot of investors, long-term investors holding on to frontline stocks, most of them sitting on very handsome profits. This is a sign of the maturing Indian retail trader, right? So kudos to, all your viewers. As far as Grasim goes, well, the gentleman is sitting on very handsome profits, but even now the trend seems to be, upwards. The stock has had its share of correction just off late. It moved from 1,800 to about 1,650 odd levels, but from there on, it's just started an uptrend. The good thing is it's not a very sharp up move. It's a gradual uptick with backed by fairly decent volumes. So I would say hold on to Grasim. Since the view is long term, there doesn't seem to be any structural damage. So 1,950, 2,000 is where the stock is headed. But even as investors, you'd want some stop loss or at least trailing stop loss. So 1650 would be my stop loss on, or at least trailing stop loss in this case in Grasim. As far as HCL Tech goes, fairly similar view. You can hold on to this stock. In fact, even look to add more. The IT space is now turning around, and most of the large players are the ones leading the the turnaround. As far as HCL Tech goes, the stock has actually moved above its 200-day moving average after a very long time, and it's sustaining those levels. Now we've decoupled from the US big tech stocks, and the Indian stocks are doing fairly well. So I would say HCL Tech, again, hold on. Here you could see a move up to 1,200, 1,250 very easily. A trailing stop loss here would be 950.
Okay, all right. So that's the view coming in on HCL Tech as well as Grasim. Well, we need to take a break with the news that the markets are in firm position. We have the mid-cap index, which is up close to around 0.6%, and the Nifty, which is holding above 18,000. Take a quick break. We'll answer more stock queries once we're back. Stay tuned. Come back. Well, we have a lot of stocks which are buzzing around from the frontliners. So just watch out for something like an Adani Enterprises, which is now speeding ahead to become the top gain on the Nifty as we speak. So that stock is up around 7% We have Divi's Labs, which is following suit. So that stock is too seeing some amount of traction. And Divi's Labs is up around 5% at this point in time. So good going for a couple of these counters, all of them from various different sectors which are seeing a lot of traction. So NTPC also joining the list with a gain of around 4%, Grasim, TCS, Hindalco, all of these stocks across sectors are seeing profit gaining at this point. But let's get to another query now. Rajeshwari Kothari writes to us from Aurangabad. She holds 10 shares of Bajaj Finserv, which she's bought at, I think, a little over 1,500. She's making losses in her investment and she wants to know whether to stay invested or to exit at current levels. Sharad, what would you recommend on Bajaj Finserv? Currently, this particular person who's asking this query is making a loss at this point, but do you see further upside? Do you see traction from these levels?
No, I think the valuations are a tad on the expensive side. Most of the valuation that it draws is from Bajaj Finance only, and Bajaj Finance itself is trading at around 6-7 times FY25 expected earnings. And I think that gradually the scale that Bajaj Finance has already achieved, it will not be very easy for them to replicate it beyond this at the same size. So the company does remain aggressive. But I think the consumer durable space, financing and everything, I think that the urban space that they have captured is pretty decent. And beyond this, growing at this rate will require some different levels, which I think Bajaj Finance will find it difficult. The other two segments, LI and GI, I think those are very long-term bets. They'll keep growing at a handsome rate, but valuations more or less factor in everything. So it's better you exit Bajaj Finserv at current valuations.
Okay. All right, Kush, would you share the same view on Bajaj Finserv?
Maybe she could hold on to this for slightly higher levels, which is about 1800. That's where the stock has resistance. Surely go ahead and book profits. I think the buying value would come to about 1500. So 1800 is where the stock has resistance. The stock could make moves up to that level. That would be a point to exit. That's where the stock would find a challenge to overcome. So hold on, exit around 1800 levels. A stop loss here would be 1650.
Okay, all right. Stop loss at 1650 and exit at around 1800 levels. Let's get to another query then. Vikram writes to us from Mumbai. He holds 20 shares of Info Edge, which he's bought at around 3,775 shares of Trent, which he's bought at around 1,035. He wants to know what to do with these stocks, whether they are worth it in the long haul. Well, both are very different stories, consumer-facing stocks, Sharad. Now that the economy is back in full swing, do you think that these stocks will see further upside from current levels? And whether they could, regain a lot of their lost glory? Case in point would be something like an Info Edge.
See, basically, it's a risk on risk off kind of scenario. If a risk on comes back, Info Edge has a lot of triggers in place. So if a risk on comes back, the valuation at Zomato and Policy Bazaar could receive a very big fillip. The way they've cracked from the highs, it's basically risk off that comes in. And a lot of investments they have done through the AIF into many small ventures. Many of them could be future Zomatos or Policy Bazaars in terms of appreciation, not in terms of the correction. So that is one positive side that can come to them. The core business we think is doing very well and should do very well going ahead. Also, we are very positive on the recruitment and space. And the fear after this COVID has been a bit overdone. And I think most of the companies operating in this space should do very well, and Info Edge will also excel on that part. The other two online portals, basically Jeevan Sathi and your 99 acres, they should also do very well. But most of the valuation we derive is from Naukri only, so around 3,600, 3,700, very decent growth rates. And Zomato and Policy Bazaar could add on. So an SOTP, I think, would value it at around 4,500, 4,800. So Info Edge, he can continue to hold on. And some surprises can spring from the AIF holdings that they have if some thing matures in a very good way over the next 3 to 5 years. Trend, the Zudio shift has been working very well. They've been very aggressive in the lower segments of 500 category with the transformation of West Side non-performing stores into Zudio and all that. Earnings and revenues we expect to grow at 35-40%. But valuations seem to be a bit on the expensive side. So I think Trent he can exit, while InfoEdge he can continue to hold for targets of 4,500, 4,800.
Okay, so those are the M&M October auto sales on your screen. Total tractor sales are up around 11% on a year-on-year basis. So it's come in close to around 52,000 units is what they've sold in the month of October. So that's flashing on your screen at this point in time. Remember, largely it's been a mixed bag really for auto sales, but a couple of them have met expectations. So the M&M on your screen reacting to the October auto sales. Before we wrap up, Sharad, just a quick word if you have on the entire list of auto sales that have come out and M&M in particular.
No, I think the shift is very clearly visible that there is a lot of pent-up demand, so which we are seeing across the world actually. Even in the JLR numbers, we can see that. And on the domestic side also, I think two-wheelers are one space where the export side of Bajaj Auto is facing some issues. But other than that, more or less it's in place. I think electric launches will be the key trigger for Bajaj Auto and Hero Moto in the two-wheeler space, while TVS has been betting on it and valuations are already at a premium. So we are more bullish on Hero Moto and Bajaj Auto at these valuations. On the four-wheeler side, I think Maruti and Tata Motors, they should do very well on all engines. And in the passenger vehicle segment, again, pent-up demand will remain very strong. The chip shortage is more or less behind us, and we are hearing very positive things about chip availability over the globally, and that should be very positive for most auto companies because it is the production side that is hampering them rather than the supply side, rather than the demand side. So I think it should be very robust for them.
Okay, all right, Kush, as well as Sharad, thanks very much for joining in and taking us through your view in terms of a lot of stock queries as well as a lot of sectors and earnings which are in focus. Thanks very much for joining in this afternoon. That's all the time that we have on the show. But do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade today.